Hi, guys. Hope you're doing good today. I want to talk to you about how changes in the stock market actually can impact angel investing. Now, I apologize up front if I have a little cough. I went through a couple of weeks thinking I had an upper respiratory infection. Turns out we go on vacation, and here I am hacking away in the hotel room and ended up, here I go, about to cough, ended up having some bronchitis. So talking is a bit of a challenge, but I wanted to get this information out to you. I wanted to talk about how changes in the stock market can impact angel investing. And the reason I'm actually bringing this to you is it's something I've been thinking about. I like to keep CNBC on in the background while I'm working away, follow what's going on in the market, follow what's going on in the economy and with various businesses. And I was listening to some of the updates about our economy, and I was wondering how those things are going to impact whether or not angel investors and VCs too are encouraged to put money to work out in the marketplace and investing in startups. So let's talk about that for a second. Now, remember, angel investors use investing in startups. Oftentimes, part of the reason they do that, there are a lot of reasons, but part of the reason they invest in startups is to diversify their asset classes, right? So they probably have stocks, they have bonds, they have mutual funds, they have all these different things that they invest in. And investing in startups is usually part of diversification of those asset classes. And what's interesting about it is if you look at the return of angel investing, historically, I'm not exactly sure what the number is, but my research pulled up a 27% IRR, or internal rate of return, on angel investing. Now, listen, there are not many asset classes that can get you a 27% rate of return. Now, a few of the statistics that I looked at actually repeated that number, but they also challenged it because when you've got 9 out of 10 startups failing, they wondered how that could really be true. Well, the way it's true is that's how that one startup that makes it is how angel investors make this huge return. We're talking 5, 10, 15, 20, sometimes even 50 times their money if they're that good and that early of an angel investor. So the internal rate of return on angel investing is very attractive, and it helps diversify a portfolio. So now what's interesting is the stock market this week is actually doing pretty good, but the last few weeks it's kind of had a downturn, and there's a variety of reasons. I'm going to mention some of those here in a second. So I was looking at those returns, and I was thinking back to the end of 2018. And during the end of 2018, the stock market had double-digit losses, not losses, but they had a double-digit downturn in the returns that were going on. I think I saw minus 11, minus 13%. It was pretty high. So how was angel investing performing during the tail end of 2018? Well, it was down a little bit too. It was down 3.2%, but you notice the difference there. It wasn't down as much as the stock market, but it was down as well. That number actually shocked me because the hypothesis I started my research on was that angel investors might be more encouraged to invest in startups when the market is down, because if the market's not returning what they want and they use startup investing to diversify their portfolio, maybe they would invest more, excuse me, more into startups so that they could get the return that they want. And it actually is appearing that that is not true. So angel investing was down just like stock investing, not down as much, but it was down as well. It actually did not increase. Now let's talk about venture capital. 2018 was an absolutely banner year for venture capital in terms of funds, meaning funds or investment pools that were being pulled together. The amount of money that not hedge funds, that venture capitalists were able to raise and put into their funds was actually a banner year for these venture capitalists. So they're sitting on a veritable war chest of capital that they could be deploying out into the marketplace. And you would think that they would put that money to work, because if a venture capital fund has $100 million they need to put to work, if they're not investing in startups, enough of them, they're not getting a return for the people that they're handling that money for. So you would think that they're absolutely putting it to work. But the research I showed that even venture capitalists are hanging back, just like these angel investors and just like the stock market. And why is that? Well, it all comes down to uncertainty. Anytime the markets are down, the variable indices are down, talking about the Dow Jones, the S&P 500, all these strong indices, when they're down, people are uncertain. And so that seems to be impacting other areas of investing like angel investing and venture capital. And why are all these things down? Well, if you've not been watching the news, we've got some serious trade wars going on, particularly between, or potential trade wars between the United States and China and the United States and Mexico. There's sort of this posturing back and forth, placing tariffs on different things, threatening to place tariffs on Mexico. There's this back and forth going on between the US government and those two governments. That's one thing. We're getting a lot of mixed signals, and we might call them headwinds. Another thing that just came in yesterday when I was looking at this research was that payrolls were down. I believe the numbers were they were expecting to see an increase in employment of at least hundreds of thousands of jobs, and it was only 27,000 jobs. I want to say that was right. You'll have to look it up yourself. Be sure to Google it. But let's just say that payrolls came in. The report from ADP, a payroll company, showed that hiring was not up as much as everyone thought. So now you've got trade wars, threats of tariffs, meaning if we put tariffs like we did on China, they're bound to reciprocate. You've got that going on. Payrolls not being what they are. Then I saw that housing prices are up ridiculous amounts. In 2018, I believe house prices were up 10%. And on top of that, now you've got the federal government, the Fed, when it comes to interest rates, is sort of saying that, well, we thought we were going to have some additional increases, but now we're not so sure the economy is performing like it should. So we may even take a decrease. Now, they're meeting right now. I think it was yesterday and today, the Fed's meeting. Rumor is they're not going to decrease interest rates this time, but they might do it in September if they continue to see these types of headwinds and this negative performance across the board. So what am I trying to tell you? There's all kinds of uncertainty out there. It's impacting the stock markets for sure. And I thought that would mean that investors would be more apt to put money to work, and so they can diversify and get the returns they're not getting out of the stock market. I thought that would encourage them to, but that same uncertainty is impacting investors, which is making them less apt to invest in startups. Now, we can see that turn around. But for you, if you're a startup and you're trying to raise capital, just know that right now, with all this uncertainty, is going to make it even harder than it already is. Thanks a lot. Have a great day. See you later.